I won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now. Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, I'm going to do a detailed technical analysis breakdown on a gold trade that I sent to the CYPRX students in advance before the trade actually played out, giving them bullish and bearish targets and giving them a full technical analysis breakdown in our private Discord chat. Way ahead of the curve, again, showing the students that we put our money where our mouth is here with our technical analysis at CYPRX, trying and attempting to steer the students in the correct direction via proper technical analysis. If anybody's interested in our mentorship program that will learn technical analysis properly, regardless if you trade commodities, indices, Forex, cryptocurrencies, our technical analysis works via multiple assets across the board. Ladies and gentlemen, that link is in the description down below. Always make sure that you reach out to me via customer support email if you have any questions. Remember, we don't have a WhatsApp, we don't have a Telegram. I will be announcing a Instagram here soon in a couple of days, so make sure that you look out for that. It's going to be a Latin America CYPRX Instagram for our Spanish-speaking students. Other than that, ladies and gentlemen, let's dive into this gold technical analysis. I have done technical analysis on GBP, JPY. I've done technical analysis on cryptocurrency, but I am also a gold intraday trader. So with that being said, I'm going to dive into this beautiful risk to reward ratio that we caught here, which is now running at about a 1-to-3. I have already taken profit from this trade. So technically speaking, it was not a 1-to-3 for me. It was a 1-to-2. I took profit at the psychological level 1644, which we will go into detail here in just 1 second. So I'm going to share a screenshot of our technical analysis that we sent to the CYPRX students in the general chat this morning, minutes in advance before the trade played out, giving them bullish and bearish targets and a technical analysis breakdown on what I was looking for to take place on gold. So you guys can see via the screenshot, it says, today at 5:28 a.m., I said to the students, intraday gold targets, eyes on. If price closes bearish below 1644, we will see a retest of the 1631. Bearish targets would be 1630.50. Then I also said to them, if we see a reversal and a bullish hold above 1644, then 1650 would be our immediate hurdle to overcome. If we can push and hold bullish above, then our bullish targets are going to be 1655.00. I said to them, do not over leverage and make sure you compensate for spread and your stop loss. Gold is very volatile. You guys can currently see that we are pushing on gold roughly to that 1650 psychological level target as of speaking and making this video. But you guys can see that 164400 psychological level mentioned originally to the students has been smashed and has held bullish above. So you guys can see our technical analysis that we send to the students now coming into fruition in the live market. Now, if you look at the bottom of the charts, you guys can see 5:28 a.m. I just want to show you guys down at the bottom where we sent this analysis so you guys can see. At 5:28 a.m. down at the bottom of my charts before the move happened, okay? But now I want to take you guys down to the lower time frame, okay? So with all of that being said, ladies and gentlemen, you guys can see that the move actually didn't take place until about 5:45 a.m., okay? So pretty much 15 minutes in advance before the move actually played out, giving them a full technical analysis breakdown on what to expect on gold. And as you guys can see again in the live market right now, those 1650 psychological levels being met. I said to the students specifically, if we hold above the 1644 psychological level, we are most likely going to see a squeeze up to that 1650. So let's go over this entire trade breakdown. Again, if you guys enjoy technical analysis like this, deep dives, go ahead and smash that thumbs up button, subscribe to the YouTube channel, and definitely consider joining the CYPRX mentorship program so that way you can properly learn technical analysis. Nothing that I constitute here is financial advice. I'm attempting to teach you guys how I give myself an edge in the market. You all need to decide as traders whether or not you're going to listen to what it is that I'm saying or ignore what it is that I'm saying. But I'm showing you guys time and time again that the strategical approach, the algorithmic approach, the logical approach that we take to trading these markets plays out time and time again. So I always do my analysis. And again, make sure that you're taking notes, ladies and gentlemen. I always do my analysis via the 15-minute down to the 5-minute, and then I look for entries on the 1 minute. Now, because I'm a scalper, I'm an intraday trader, I'm more used and accustomed to the 15-minute time frame. Some traders like to start from the daily 4-hour, 40-minute, right? But I like to cut my time short. Here at CYPRX, I've realized that these markets are a tool to supplement your income via the amount of time that you spend. So, right, you can make massive amounts of money in very short periods of time in these markets if you know what you're doing. That's what I like to do personally. That's why I became a scalper. I like to get in and out of the market. Here's a screenshot of my profit from this trade. I made about $1,000 in about 40 minutes on this trade. So again, supplementing my time via the money that I make. I like to get in and out of the market as fast and as swiftly as possible. So I do my technical analysis on the 15 minutes. So we'll start on that time frame. What I was seeing via a couple sessions before this New York session. So again, if I'm looking to trade this specific New York session, which today was Tuesday 25th, 2022, I like to backtrack at least a session or two before to get areas of interest to where I could be either a potential buyer or seller from. You always want to get your where, you want to get your why, and you want to get your when. So with that being said, we're going to go ahead and we're going to get our where. So we want to understand where we're going to be potential buyers at and determine if we're going to be buyers or sellers. Well, you guys can see that the past two New York sessions have been bullish for gold, specifically speaking. You guys can see that gold down here at the bottom via this New York session bought off and broke a previous market structure. So we go ahead and we highlight that area as an area of significance where the banking institutions, if they ever push price back down into this specific area, we could look to be potential buyers again. Okay, same thing over here. We have another area of interest. This came in at the psychological level 1630.50 level, where the market makers injected liquidity into the market, breaking another market structure. So you guys can see here how market structure is starting to form. Let me scroll down here so you guys can see what I'm talking about. We see the market makers' intentions. They are grabbing liquidity beneath lows. They're shifting market momentum. They're creating higher lows, injecting liquidity into the market, and they're starting the definition of an uptrend, higher highs, higher lows. Then we have another institutionalized pullback where the market makers are taking profit and injecting liquidity back into the market to drive price of gold higher. Okay, so we have pretty much three areas of interest during the previous New York session where the bank and institutionalized traders are buying gold from. So again, utilizing the advanced tracking methodology, we want to generate two significant areas where we could be potential buyers from if the market makers push price back down into these levels. Well, I like to be realistic with my expectations from the market. And generally speaking, again, remember the markets only have a certain period of time during each specific session to place trades. So during New York session, you're looking at about a 12-hour window. Okay. So being realistic via our expectations, we're not going to expect the price of gold to drop all the way back down here and then flip all the way bullish. Now, it's very possible for that to happen, but again, we want to be realistic with our expectations. So the very first two significant levels that I highlighted was this low right here. And again, we're looking for the candlestick bodies down to the wick, identifying an area of interest where the market makers pulled price back, created the definition of an uptrend or bullish order flow via a higher high or higher low that led to a market break in structure, highlighting that area and extending that over to the right-hand side. Okay. The second area of interest where the market makers bought from the previous New York sessions was this higher low right here. So doing the same thing, tracking from the candlestick bodies down to the wick and extending it over, you guys can see now coming into this London session how that correlated with the previous buy area from New York session. So coming into this New York session, I'll go ahead and I'll rewind price action a little bit because this is all the price action information, again, that we would have had coming into this New York session, which we did have, and is exactly why we sent the technical analysis breakdown to the CYPRX students about 15 minutes in advance before the trade actually played out. So I said to the students, again, if we can hold above the 1644 psychological level, that we are most likely going to see a push into the 165, which we are currently seeing now. But why was I seeing that? Okay. How did I lead up to that technical analysis breakdown and what were my entry criteria? So again, higher time frame analysis. Okay. Right now, I am going to be a potential buyer. Every time you come to the market, you need to determine whether you're going to be, number one, a market participant in general, or you're going to sit on the sidelines, or you're going to be a buyer or seller, or if you're just going to sit and watch price consolidate. Well, for this specific breakdown, I was determining that I'm going to lean more so towards the buy scenarios. So with that being said, why was I looking at it that way? Well, number one, again, we have price dropping and melting straight down into our area of interest that we had identified from the 15-minute area where the bank and institutions, you guys can see over here, via the banks of whatever operate in New York session. Okay. Again, I don't know specific banks off the top of my head that operate during New York session, but we can see that this is exactly where they injected liquidity into the market to drive price higher. Okay. And they melted straight back down into that area of significance. Now, something to pay attention to is the CYPRX pattern that I like to teach you guys here, which is a market maker reversal pattern. Again, this is a pattern that the market makers must create in order to reverse price. You guys can see the market makers pre-engineered a low in the market. This is retail liquidity in the market that have they're less informed traders, right? They're the weak hands. 9 times out of 10, if you don't know how to identify liquidity in the market, then most likely you are the exit liquidity in the market, ladies and gentlemen, okay? So here we can see a pre-engineered low during London session. We then see the market makers sweep that low and reject the psychological level major, which is the 163,900 psychological level. Gold moves just like XRP. It moves via the quarter theory. That means it respects the 00s, the 25s, the 50s, and the 75s as their major psych levels, okay? With that being said, you guys can see that we hold above the psych level 163,900, okay? And then we create a what afterwards? A higher low, higher high, higher low, higher high formation. You guys see the pattern right here. This is the pattern that I like to teach you guys to identify, okay? Higher high, higher low, higher high, higher low formation. So this is the pattern that the market makers must create in order to generate another move higher, somewhere over to the right-hand side. They are sweeping liquidity beneath lows, showing us the willingness to violate those lows and shift market momentum, now creating bullish order flow. You guys see what I'm seeing? Okay, so that on the lower in the fractal time frame, i.e. the 5-minute chart, allowed us to scale down, okay, to the 1-minute chart to say, all right, well, now that we've broken previous market structure, the market makers have created a significant higher low after the grab of liquidity. That's the higher low that I like to teach you guys here on YouTube, specifically speaking, to generate your Fibonacci sequence tool from and take it from the higher low after the sweep of liquidity. So that's going to be this higher low that came in at the psychological level right here, taking it from the higher low to the high that broke the psychological level major 1644, which we mentioned to the students. If the market holds above that, we are going to see a tight squeeze up into 1650, okay, for our immediate hurdles. And all we simply did to catch this trade, ladies and gentlemen, was we waited for a pullback based off the ideology that the banking institutions cannot just drive price higher off of one momentum push. They must consistently add to their orders to drive price to where they seek to take full profit from. Okay. With that being said, all we simply did was we sat on our hands. We waited for New York session to start. We sent the technical analysis out to the CYPRX students, again, being patient and waiting for the market to come to us and not chasing the market. 90% of retail traders would FOMO out the mouth and start putting in orders all in these bullish candlesticks, and it would throw their risk to reward off. Remember, again, as a trader, your goal is to generate a sound risk to reward to execute a high probability that a trade is going to go in your favor. Here at CYPRX, we generate a sound list of around 10 confluences to give to the students via naked price action. Again, you don't see any indicators on my charts, ladies and gentlemen, except for the session splits. Now, we do give a couple of indicators in the CYPRX advanced course material to the students, but it is not to generate entry criteria. It is to generate confidence to hold the trade longer, which is all you can technically use indicators for. Why? Ladies and gentlemen, pay attention. Indicators are lagging. That means that they fall behind via how they generate price action information. Okay. Price action is the most immediate information that you can gather from the charts to generate entry criteria. Remember that. Anybody that you see on YouTube that pulls up their charts and they have RSI, MACD, moving averages, volume, all on their charts that just crowds their judgment, ban them, block them, unfollow them, because you don't need that that negative information clouding your judgment, ladies and gentlemen. Do you guys not see that the general herd trades that way? Well, why would you trade like the general herd when you know for a fact after watching this YouTube channel that the banking institutions only trade with two things, ladies and gentlemen? That is down here at the bottom in the form of time, and that is over here to the right-hand side in the form of price. That is all the market makers utilize to trade these markets. Do you understand that, ladies and gentlemen? And we have institutionalized traders on CYPRX that have confirmed that information. Okay, so simply all we did to catch this trade was we set up an area of interest now via the higher time frame that the market has met via the London session. We've identified that we are in a bullish environment temporarily. Why? Because the previous two New York sessions bought price action. So logically speaking, we would need to break these two blue areas before we can consider to be sellers on the higher time frame on gold. Okay, so on the lower time frame, dropping down to the 1 minute chart, once price came into our area of interest, we were able to determine that the market maker pattern via institutionalized liquidity setups here in the market, a sweep of that liquidity, and a shift in market momentum has now occurred. All we had to do now was wait for price to retrace down into discount, anywhere between 62 to 100% discount, to get a sound risk to reward entry to target logical areas. Again, remember now, let's move over to the start of New York session. What are we looking for? Early sellers to target. If we're going to be buyers, ladies and gentlemen, we want to see early sellers prior to the New York session in the form of either retail trendline liquidity or retail early manipulative bearish candlesticks to take positions in the form of buys to liquidate their stop losses. Okay, remember, 90% of retail traders chase the market. They're going to see all of this bearish price action over here. Okay, you guys see all this bearish price action, they're going to get manipulated into believing that the market makers are going to create another leg down, or that they're creating a lower high, lower low formation. They're going to get manipulated into believing that the market's going to sell off. But what they're failing to see is everything that I've explained to you guys up to this point, that the market makers have pushed price into a previous higher time frame, i.e. the 15-minute area of interest, which was this blue box. They've generated an area of liquidity. They've showed us the willingness to liquidate that position, shift market momentum, create bullish order flow, and create new market structure highs. Retail traders have no idea what they're doing. They're drawing some type of trend line on like this. Look at this. Okay. And they're taking sells from highs. And I can't say that that doesn't work necessarily, but if retail traders are logical and they take profit properly, then yeah, maybe that works, right? Anybody that was selling from here definitely got some profit if they were logical and they took profit properly. However, that is not how the banking institutions trade. The banking institutions are not taking sells from these highs. They're pulling profit from their buys to manipulate price down into buys to buy up gold again, to then take profit from liquidating over leveraged sellers. Watch exactly what happens and what I mean by that. So again, they drop price back down into discount. We break out of the manipulation window. Again, I can't give you guys specific times, which is what I give to the CYPRX students, but generally speaking, this is our manipulation box. Hopefully you guys have been catching on to me drawing that on, and you guys have kind of specified on where that generally is. So what we do now is all we do is we target retail liquidity, premature sellers. We have all of the confluence set up so far, at least the ones that I give to you guys on YouTube. Now all we do is we sit on our hands and we wait for the market to come to us and watch how this plays out, ladies and gentlemen. The market breaks out of the manipulation window. This is where I sent the message to the CYPRX students roughly at around 5:28 a.m. Okay. And then boom, the market drops straight into our area of interest, activates our buy limits. We get tapped into the market roughly at around 79% discount. You guys can see that the market makers injected liquidity right at around, let's say, 90% discount from the previous buy region, where they broke previous market structure and showed us the willingness to start to create bullish order flow. And then they came back for what? Retail. Let me clear up the charts a little bit so it doesn't look confusing. I know it looks like I have a lot of lines on my charts. These are all just significant areas of interest. That's all. Okay. Now we're targeting, now that we're in buy positions, following what the institutions are doing, we are now targeting trend line liquidity, which is what I mentioned to you guys multiple times here on this YouTube channel. Okay. Check this out. We straight come right into the trend line liquidity, ladies and gentlemen. Let me speed this up a little bit. Boom. Okay. So do you guys see where the institutionalized liquidity rests? And look at the targets, 1650, psychological levels that we mentioned to the students were the immediate hurdles that we need to overcome to see a push up into 1655. So I hope that you guys enjoyed this video technical analysis breakdown. I'm going to read real fast for you guys again why we were taking profit once the market violated these highs. We had some very interesting news come out for the United States dollar today. The CB Consumer Confidence, which is a red folder event at 7 a.m. It is now currently, as I'm recording this, 6:34 a.m. So we wanted to get out of the market before this high volatile news comes out. We're most likely going to see a massive price swing in gold when this news drops, or maybe that's already being priced into the market right now. Who knows? As of right now, we're out of the market. This was a very interesting article. I just think it's interesting that it matches the technical analysis targets that we gave to the CYPRX students ahead of time. Now, also, if anybody's interested, ladies and gentlemen, I'm not an affiliate of this broker, but this is the broker that I personally utilize to trade gold. They offer 1 to 500 leverage. Again, if you're not used to trading leverage, then I don't recommend it. And if you are, then, I recommend that you scroll down to the bottom of this website, you open up a demo account and you start back testing and demo testing the live market. So that way you get, comfortable to it. Ladies and gentlemen, like I said, anybody that's interested in learning our technical analysis strategy in detail, where we take beginner traders and turn them into advanced CYPRX superior traders. We have a beginners, intermediate, advanced, and CYPRX 2.0 course material, over 60 hours of combined information in the course. We offer a private group chat. We offer weekly Zoom calls, ladies and gentlemen, and we have a lot more content to drop for the CYPRX students in the near future. Towards the end of this year, we're going to be dropping CYPRX 3.0. Also, we're going to be dropping CYPRX 4.0 sometime towards the middle of next year. So those are two things to look forward to as CYPRX students. Blessings to you guys all. If you all enjoy this technical analysis breakdown, this deep dive, showing you guys how in detailistic perspectives we got and caught this beautiful 1-to-3 risk reward ratio, which if I would have held the full trade and not taken profit, this would have been almost a 1-to-5. Absolutely beautiful and phenomenal here at CYPRX. Again, putting our money where our mouth is at, sending technical analysis ahead of the curve to show you guys that we know exactly what it is that we're talking about via how we look at the charts. Blessings to you guys all. I hope that you guys have enjoyed the past couple of YouTube video breakdowns via the XRP stuff that's going on in the market. Make sure that you guys are awake and aware. You're doing your own personal research. Oh man, what a mouthful. Okay, blessings to you guys. I'll see you guys. Hope that you all have an amazing week. Smash that thumbs up button, subscribe to the YouTube channel, and I will see you guys in the next YouTube video breakdown.
I won't stop till I hear him say